Crypto has been too bullish for too long. If you're in crypto for a while now, not just a few months, but potentially a few years, chances are you are up. But it seems like people have forgotten what the potential downside in a bear market is. We are close to the all-time high, we continue to creep up, but really, what's the risk that we take on when we buy now? There are several models that worked very well in the past. For example, this here. This is the realized price. So it looks at the average cost basis of the market. We've got the Bitcoin price in black and we've got the realized price in orange. And whenever the price went below the realized price, so when the market in aggregate was in losses, it was historically a very good time to buy into Bitcoin or into crypto in general. Currently, that realized price is at $47,700. The issue with this approach is that we can potentially fall even further. So have a look at 2018. The realized price was at 4,800, but we bottomed out at 3,400. Or over here, the realized price was at 23K, but we went all the way down to 16K. And so maybe the potential risk is a bit higher than only a 50% drop. But there are other models that are a bit closer to the bottoms in prior bear markets. So for example, here we've got the balanced price. When the bear market ended, we were very close to the balanced price historically. Now, naturally, that price is lower than the realized price. It's currently at 36,500. Now, I'm not saying that we're going to crash down to 36K in Bitcoin tomorrow. But what I am saying is that it does make sense to hold other assets as well that are not correlated to crypto. Gold, for example, silver, for example, very little correlation, and it's likely going to go up when the rest of the world is burning. But let's go back to our models. This is the balanced price. The problem with the balanced price is that sometimes that number is also going down. So let's remove the Bitcoin price. We see that it's not necessarily an indicator for a good bottom because it fell from 4,700 all the way to 3,300 in 2018, 2019. And so maybe the best indicator is this here. It's the CVDD. It doesn't go down at all at any point in time. And it was historically a very good measure when Bitcoin bottomed historically. After the Silk Road and Mt. Gox collapse in 2015, we hit the CVDD. After the miner collapse and ICO bust in 2018, we hit the CVDD. Same for the COVID crash, same for the FTX and Three Arrows Capital bust. So at least historically, this was a very good measure how much potential downside in Bitcoin there is. Currently, the CVDD is at $39,666. It's monotonically increasing, so every day this number is going up. But that's now how much risk we have in the Bitcoin price. It's a drop of 60, maybe 65% from here. But then there's the counter argument. Is the market actually still behaving the same in the future as it did in the past? Since the structure of the market seems to be changing, the participants that are now getting into Bitcoin are very different compared to what we've seen in the past. Because have a look at this. This is the number of addresses, of Bitcoin addresses, that have at least 0.01 BTC. It used to also almost monotonically increase, but for the last 2 years, we don't see that going up anymore. Here's also the Bitcoin price at the same time in this chart. The Bitcoin price did go up, so it went from 40K all the way to our current prices, while the number of addresses with 0.01 BTC did not grow. Now, this is not a statistic that's depending on this threshold, because for the number of wallets with 0.1 Bitcoin, it looks pretty much the same. Let's go another order of magnitude up. Again, the same situation. So really, it's not anymore the masses that are buying Bitcoin. Bitcoin demand is now coming from the heavyweights. It's coming from Wall Street, it's coming from MicroStrategy and other Bitcoin treasury companies. Historically, we have seen higher highs and higher lows because more and more Bitcoin was held by the long-term holders. So here we see now the percent of BTC that has not moved for at least 5 years. And again, this continues to go up, so Bitcoin becomes more and more scarce as an asset. Thus, the price tends to go up over the long term. Of course, there's also other factors like the expansion of the monetary base, right? The Federal Reserve and the money printer. But in general, right, adoption is what's driving Bitcoin. Adoption as an investment vehicle, not as a means for exchange. But since it's not retail that's buying anymore, we've now got a very different catalyst that's driving the price. This here is the number of Bitcoin that's held by the various Bitcoin ETFs. The chart starts in January of 2024, so we've got 1.5 years of data, and it also tends to trend up relatively consistently. So that's what's driving Bitcoin from 40K to above 100K. Plus, of course, MicroStrategy. And that is what's shown over here, the Bitcoin Treasury Company balances. It's monotonically increasing, so the treasury companies never had to sell their Bitcoin. The risk management was executed properly, right? Because during that time, Bitcoin still fell from 69K all the way to 16K. Still, Michael Saylor didn't sell any Bitcoin. He didn't have to. But yeah, while the Bitcoin ETFs have acquired 3% of the entire Bitcoin supply over the last 1.5 years, that's roughly 2% per year, we're also seeing Michael Saylor and co buying. And when we then combine this in a chart, we get this here. And so that's then the common narrative. Since now the entities that are buying Bitcoin don't have the intention to sell. And since in the past they just continued buying and they didn't really sell, overall we just see an increasing balance. We should maybe not expect that much of a bear market anymore. Because the retail investor definitely is capable of reducing their balances, right? This is what we saw in 2018. On the surface, it makes logical sense. Since now the purchasers are buying for the long term and they're unlikely going to sell, why should we see another 60, 70, 80% drop in Bitcoin? The answer, I believe, lies in long-term holder balances. Because while the purchases of Wall Street and of the Bitcoin treasury companies is of course long-term very good for Bitcoin, that doesn't mean that at one particular point in time we cannot see anymore a supply overhang. That's still possible. The long-term holders can sell. And the impact is actually quite large. Now, this is the ETF change over time, right? How much accumulation do we see by all those ETFs? But have a look at the long-term holder supply change. It's way, way larger. The long-term holders sold close to 72K. They also bought close to 55K. Then they sold again close to 100K. And now, interestingly enough, they're buying again, even though the price isn't necessarily as low as it was 1 year ago when they bought the dip. So now the long-term holders are buying. But still, the message here is that the long-term holders have at least during the span of a few weeks and months quite an impact on the price. They can stop an entire price rally, and they can also create a bottom in case momentum slows down. And so because of that, because MicroStrategy and Wall Street doesn't yet own the majority of Bitcoin, there are almost 20 million Bitcoin being mined now, and those entities only hold a bit over 2 of those Bitcoin. Because the vast majority of Bitcoin is still not held by traditional finance, we will very likely continue to see the cycles. Yes, this purchasing is great. Yes, this purchasing will likely create further higher highs and higher lows over time. But it doesn't mean that there is no more volatility in Bitcoin. It doesn't invalidate models like the CVDD. I do believe that there is still the risk for Bitcoin to drop to those kinds of levels. Of course, the longer we continue to trade at higher prices, the more the CVDD will appreciate as well. Now, everything that we've seen so far in this video is just showing a problem. It's a problem of having a potential risk to drop quite a bit in Bitcoin. Some people think because there's not that much more upside in Bitcoin, but potentially a lot of downside, that the solution to this is to buy altcoins instead. Especially the small altcoins, because the smaller an altcoin is, the more upside there is. But that's the kind of returns you got with the small altcoins in the last year. Pretty much everything is down. And in the last year, Bitcoin went up by more than 70%. So the Bitcoin price can appreciate by that much, and at the same time, the vast majority of altcoins still goes down. How many altcoins among those smaller ones outperformed Bitcoin in the last year? We can count them, right? This is 100 tokens over here. It's 1, 2, 3, 4 altcoins. 4 outperformed, all the others underperformed Bitcoin. 96 altcoins out of 100 did worse than BTC. So clearly, the solution to the problem that Bitcoin is risky and that it might not have that much more upside potential is not to buy small altcoins. Rather the exact opposite, because I think this is a structural market advantage we can have in crypto. When things are clearly going down that much over time, not just the number of altcoins is going down, but also the way how they go down, how consistently they go down. When that's the current situation, we can take advantage of that. The reason for underperformance like this is usually token inflation. So it's more and more tokens that hit the market that get emitted in order to pay out the team, in order to pay out the early investors, etc. But if demand doesn't grow as quickly as supply, we see this underperformance. So this here is Balancer relative to Bitcoin. And Balancer, of course, has an expanding token supply. It 3.5x'd over the last few years. And that, of course, creates a lot of constant sell pressure. But here's the opportunity. When the altcoins go down that consistently, because everybody is cashing out, all the insiders are making money, we can just bet on falling prices of those alts relative to Bitcoin. Not in US dollars, but relative to Bitcoin. Because let's say Bitcoin does do another 2x, of course, a lot of altcoins will go up as well, but probably less than Bitcoin will. So instead of buying the altcoin over Bitcoin, we do the exact opposite. We buy Bitcoin and bet on falling prices of Balancer. Then we get this chart. This is now Bitcoin relative to Balancer. This went up in the last year by more than 400%. And it went up in the last 2 years by almost 2,000%. And so a lot of relative valuation charts to Bitcoin look like this. The vast majority does. And so that's how I personally made my money. This is my personal return in the last 4 years. Had I just dollar cost average into Bitcoin, so the best of the cryptocurrencies long term, I would have gotten this gray return. But because I also did shorting of altcoins, I got the black return. More than 2x just through those trades. And again, if you're a bit more aggressive, you can make even much more additional return from that. I am very conservative with my trading. And so our community shares their wins as well, right? On individual trades, you can make a lot of percent returns. But again, it's about risk management and it's about the long term. This chart counts more than this single trade. So yeah, if you want to boost your returns as well, feel free to check out various premium tutorials. Gaining from relative valuations via the Aave platform over here, hedging macro risk during a bear market, or for example over here, using perpetual futures to bet on relative valuations. And this is probably the most important of the videos, risk management with relative valuation bets. You can have a strategy that has a 90% plus chance to win a trade if you're not managing the other remaining 10% with the risk. And if you're then losing everything with those 10% of trades, then you've gained nothing. So this is super, super important. Please don't enter any of those relative valuation bets without watching this video. I'm of course sharing my own trades as well, right? This is where I shorted the WorldCoin token. A lot of people copy traded me on that. And so feel free to join us. It's currently $125 per month. This rate is locked in. So even when I increase the price in the future, it will not be increased for anybody that's already subscribed. You should see a link to premium directly over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. Cheers.